So let's start with items of financial statements. This chapter weightage is approximately 12 to 18 marks. 12 is minimum, up to 18 it may come. Getting it? Remember, this chapter I suggest you to directly read from ICA material. Of course, my material is there, but in that I have not covered disclosure requirements topic. Almost in every item, disclosure requirement I have not covered. But from important exam point of view, that is enough. But this notes is something which is added recently. This notes I did not cover, but I mentioned reference in the main book. In my main book, I clearly mentioned for these topics, please refer so and so page. I clearly mentioned as a reference in my main book, which I released in July 2022. Okay. So what auditor has to items of financial statements? You see, any standards you take, a documentation chapter you take, all the standards, what are they saying actually? They are only saying conceptually that auditor has to obtain evidence. How to obtain evidence? In what are the ways that he can obtain evidence? Only regarding that the standard actually explains. Suppose, taking a real example, how to do audit of insurance policy taken by the company. Suppose company purchased insurance policy on stock. How to do the audit? That point none of the standard explains. How to verify debtors? How to verify sales? How to get sufficient appropriate evidence on taxes paid by the company? Nothing is explained in the standards. What the standards standards conceptually speak what you have to do. They generalizedly will say that in respect of all important assertions in the financial statements, the auditor must get sufficient appropriate evidence. This is what the standards says, correct? They don't say anything beyond that. Now in this chapter, we are practically understanding, getting it, how we verify purchases, how we verify sales, how we verify employee benefit expenses, how do we verify depreciation, how we verify fixed assets, how we verify creditors, debtors, everything. Able to understand? Now, this is newly added notes. This is something the financial statements has to disclose. These are the disclosure requirements to the financial statements. Notes. So, the company has to disclose in the financial statements the following. In the recent exam, this point has been asked for 4 marks, and even this point has been asked for 4 marks. 4 or 5, something it was asked for. 2 points have been asked for 4 plus 4, 8 or 10. Many students, when they asked about this Binami, they straight away wrote Caro point. But I showed in my paper analysis video also, that is regarding this. Items of financial statements notes. I showed after the exam was over, May attempt 22. I made a video on paper analysis. In that I clearly showed this. It's not Caro, it is items of financial statements. Are you getting it? So anyhow, I'm just telling you, this is something, a disclosure requirement. This is something, a disclosure requirements to be made by company in the financial statements regarding CSR. What disclosures company shall make? Very simple. How much amount company has to spend during the year? That is something 2% of average net profits. How much of it is actually incurred? What is the shortfall? And what is the shortfall in the last year? What is the reason why the company has spent lesser amount? What are the activities the company spent? CSR activities. What are the related party transaction, like contribution to a trust, which is related to the company? Where a provision is made with respect to liability incurred by entering into obligation, the movements in the provision during the year should be separately shown. CSR related provisions. If any provision has been created, you need to check what is opening, what is closing, what happened during the year to the provision, all that. Any 5 points you have to write in this. Next. Second point is talking about how to round it off. How to round off the financial statements numbers. That is easy. If the financial statement total income of the company is less than 100 crore, nearest million the company can round off. Nearest million. Getting it? 100 crore means maximum how many millions? Approximately 1000 millions. Means 1 billion. Getting it? So if the financial statements are in billions, you can round it off up to million. Suppose if it is more than 100 crore or 100 crore, you can round it off even to the nearest crore, or you can present the financial statements in lakhs, or you can present it in millions, you can present it in crores. You look at Air India, they present financial statements in millions. Their profit and loss account right side revenue from operation 10,000 will be there. Actually 10,000 millions it is. Able to understand? State Bank of India has presented in lakhs. Able to understand? So when a company is presenting, which means, now tell me, if a company has an income more than 100 crore, can they present actual number of the actual value of the transaction, actual revenue from operation? No, it is not suggestible because the number appears very big. The moment it crosses 100 crore, the number approximately goes to 10 digits. More than that. So 10 digit means it occupies the reading space so much. It is sometimes confusing. Able to understand? Next, company has to disclose the following relating to Binami proceedings, Binami property, whether any proceedings has been initiated or pending against the company for holding Binami property. This is exactly Caro reporting also the same. Getting it? Rules made as the company has to disclose what is the property, amount, details of beneficiaries. Actually, you can even refer Caro point also. Here, one advantage everyone has. Even in Caro also, details thereof has to be given is what mentioned. But these points listed in Caro, it will not there. The points, what points you have to disclose, that is not there in Caro. Even if you write as per Caro 2020 Binami, it will not be treated as a wrong answer. Why? I'll tell you. The person valuing the paper, he doesn't know that much knowledge. First point. If you do not write a point which is there in suggested answer, he will identify that you didn't write. If you write an additional point beyond what is there in the suggested answer, he cannot decide is it right or wrong. Logically correct or not? If you give me costing paper, if you write one additional note, how do I know it's right or wrong? I will see here some 5 points, you wrote only 4, 1 point missing, I can tell you. But if you write one extra point, I don't know is it right or wrong. That one advantage is there for everyone. Okay. So, if the property is in books, reference to the item in the balance sheet. So, if at all you mentioned that Binami property, getting it, details in respect of which Binami proceedings have been initiated, it is shown under fixed assets or current assets or somewhere. So, you need to disclose that property reference, refer to fixed asset, 9th item, like that. If property is not in the books, fact must be stated. Where there are proceedings against the company under this law as an abettor of the transaction, means the company who did the transaction as the transferor, then the details shall be provided. If the company is the original transferor, details shall be provided. What is the nature of proceeding, status of the same, and company's view on the same? What company's argument? What is the status right now? So what is the status of proceeding right now? Audit, company has to disclose. This is something disclosure requirement by company, not auditor. First understand. We are talking about financial statements. How to audit them we are talking about. Which means the financial statements, disclosures therein is responsibility of whom? Management. So this is a question. What are the disclosures relating to Binami property held by the company shall be made in the financial statements is the question. Correct? So these are the disclosures. Got my point? Everyone. Same way, we have some other disclosure. Every company shall disclose any transactions that were entered with the companies whose name was struck off under section 248. Whose name was struck off. Nothing but registrar of the company will strike off the name. You might have seen this point in company law. If the company has obtained permission, if the company has incorporated by giving false information, the registrar can strike off the name. You might have seen this. Incorporation chapter. Strike off the name means what? Binding means what? Strike off means Once the company name has been stricken off, it cannot do business. Means it's nothing but indirectly a prohibition on the company to do further business. Correct? Winding up means what? Shutting down the company. If a company name is striked off, auditor can again remove the strike. In reality, they will open the membership register of companies and strike off. No, that's not that strike off. Strike off means what? They'll put full stop to this company operations. That's what strike off means. During strike off, if company renders any activity, further punishments and all were there. Now, if you are company, you are the director in a company, did your company entered into any transaction with the companies whose name was struck off? The company shall disclose following details. Name of the company whose is struck off, what transactions you did. You invested in them. You sold goods to them on credit. You purchased goods from them on credit. What is the outstanding? What is the relationship, if at all you have any relationship, like holding, subsidiary, associate? If you have, you need to disclose that. So if the company has entered into any transaction with a company whose name is struck off, the company has to disclose the following data. Understood or not? All of you? Now, shares held by the struck off company, outstanding balances to be specified. Next. Now, in the financial statements, these are the important ratios which every company shall disclose as per Schedule 3. Like current ratio, debt equity ratio, debt service coverage ratio, ROE, inventory turnover, trade receivable turnover, trade payable turnover, net capital turnover, net profit, return on capital, return on investments. These are the approximately some 11 or 12 ratios which company has to disclose in their notes to accounts. Understood? The company shall explain the items included in numerator and denominator for computing the above ratios. Further explanation shall be provided for any change in ratio by more than 25% compared to the preceding year. Means analytical procedure also company has to do. Last year debtor turnover ratio 4. This year debtor turnover ratio 3. What is the percentage of change? 4 minus 3, 1 divided by 4 is equal to 25. Company has to show the reason why there is a huge change in ratio. So important ratios company has to disclose. And not only ratio, percentage or number if you disclose enough. You need to mention numerator and denominator, how the numerator arrived, how the denominator arrived. You need to mention that. Further, company has to disclose reason why there is a substantial change compared to previous ratio. What do you mean by substantial change in this? 25% or more. Understood or not? Hey, what happened? Have you seen all this? That's why I'm taking you directly from study material. Next. Whether company has traded or invested in cryptocurrency or virtual currency during the year, the following shall be disclosed. What is the profit or loss on the transaction involving crypto? What is the amount of cryptocurrency held as on 31st March reporting date? Deposits or advances from any person for the purpose of trading or investing crypto or virtual. This is nothing but margin money we maintain with the crypto broker. Very simple. You want to transact in Paytm. First what you need to do, you need to add money to the Paytm wallet. Then only you can transact in Paytm. Now whatever money you added to Paytm wallet is a deposit with Paytm, nothing but. Same way, if you want to buy shares and securities of any company, first you must have Demat. You need to transfer funds from your bank account to Demat account. Same way, in crypto also, if you want to buy cryptocurrency, you have to transfer funds from bank to crypto account. There are so many now coins which, there are so many coins which is very famous. Now crypto is banned. Now it is not legally valid. RBI clearly says crypto is not valid legally. They didn't prohibit, but they boycotted. Getting the point? Trading is not prohibited yet. Able to understand? Next. So the company has to disclose all these. Understood or not? These are the 6 important disclosures which company shall disclose in the notes to accounts. Understood all of you? From this, in the last exam, 2 points were asked. This time also there is a possibility 1 item may come. 4 marks to 5 marks question. Easy to understand all of them? Next. Next we will straight away go to the first page. So introduction. First of all, companies prepare financial statements using GAAP principles and accounting standard. What is a financial statement audit? It comprises verifying financial statements and disclosures by independent auditor. The result will be reported by auditor attesting to the true and fairness of the financial statements and disclosures. First of all, preparation of financials is the responsibility of management. That's it. Now, what is an assertion? We have seen already in documentation chapter. Assertion is nothing but representation made by management. Whatever management is giving the information, whatever management is putting the data, explicit or otherwise, which are embodied, which are as part of financial statements. Getting it? They are treated as assertion. But assertion do not include financial statement itself. I cannot say financial statement as assertion. But inside financials, whatever is there, we can call it as assertion. In preparing financial statements, company management makes implicit or explicit claims regarding completeness, cutoff, existence, valuation, rights and obligation, presentation and disclosure. What are they? When a company is saying 10 crore as trade receivable, it is indirectly saying total trade receivable is how much? 10 crore. Entire debtors, entire receivable from customers up to 31st March is 10 crore. And all these 10 crore worth of customers are existed. All the transactions of them are occurred during that year. And the value is 10 crore after provision. And this is a right of the company. These are the goods which we sold to them. So it is we who are having right. And we are presenting and disclosing breakup for more than 6 months, less than 6 months, all that. For one item, see how these many assertions apply. These many assertions are claimed by the company. Able to understand. Example, they have given one example. You read it, you will simply understand. Next. Income statement captions comprising revenue and expenditure balance. So in income generally, what assertions we will look into? Occurrence. Whenever they showed as an income in P&L, they are simply saying the transaction is recognized financial statements. Whatever transaction we recognize, it may be expenditure or income. It is occurred during the year and it is related to the organization. Example they have given, employee benefit expenses has been incurred during the period in respect of personnel employed by the entity. Employee benefit expenses does not include unauthorized personnel. Example, employee benefit expenses. Suppose you say in profit and loss account, employee benefit expenses some 100 crore. What does it mean? What that assertion explicitly saying? It is saying this is an expenditure incurred in respect of employee benefits who are employed in the organization by the company. Employee benefit does not include amount paid for unauthorized staff. Unauthorized means what? Those who are not working in the company or those who are working in the company but not recruited formally. Whatever salary debited in P&L, there is only a salary paid to the company who is recruited. That's what the assertion says. Able to understand? Now, completeness. All P&L items, when I say purchases 55 crore, sales 6,50,000 crore, Reliance, it says total sales that were happened during the year is 6,50,000 crore. See, when we say sales 6,50,000 crore, we are indirectly saying it is recognized during the year, it is related to our organization, and total sales are only 6,50,000. And the total sales up to 31st March are 6,50,000. Able to understand? You see, profit and loss account for the year ended 31st March 2022. When I say like that, inside that below statement, when I say revenue 3 lakh crore, the 3 lakh crore is earned up to 31st March. And 3 lakh crore only earned, completeness. An entire 3 lakh crore is belonging to our organization. That's why we showed in our P&L. So that is what. All transactions which were to be recorded have been recorded. And none of the transactions have been omitted. Cut off all expenditure relating to this accounting period is correctly accounted. So that is what this point says. So regarding employee benefit expenses, they took an example and how occurrence is to be interpreted, completeness is to be interpreted, cut off is to be interpreted. They are given example. Understood. Next. Can you switch on the fan? Next. Measurement. Transactions have been recorded at right amount, accurately at the right amount, and no errors were occurred when we are recognizing the expenditure or income. Measurement is a word which we use for P&L items. Valuation is a word which we use for balance sheet items. Balances only can be valued. Transactions cannot be valued. Transactions can only be measured. Understood? Then, transactions, presentation and disclosure. What is this regarding? How employee benefit expenses has to be presented, operating expenses in production, administrative, cost of personnel, sale of products how much, sale of services how much, other operating revenue how much. Revenue shall be disclosed like this. Getting it? Employee benefit expenses shall be allocated like this. That is called presentation and disclosure. Transactions have been properly classified and presented. Transactions events are properly segregated or desegregated. Presentation, disclosure are considered during the course of audit. All this you have to consider. How they were classified, how they are presenting, is it misleading? You need to check it out. Understood? Next. Same way, for balance sheet, what assertions we will check? Mainly, generally, we check existence, whether the asset physically existing. We check completeness. All the assets, company showing plant and machinery worth of 100 crore. Really complete 100 crore worth of plant and machinery there physically or not? Our company is indirectly claiming we are having totally 100 crore of plant and machinery. Cut off. Whatever amount shown under plant and machinery, that is plant and machinery installed and is being used by company. It is not capital work in progress. Cut off means. Valuation, whatever value we are showing, that is after providing depreciation, after providing provisions, all that only. It is the right value, fair value that can be recovered. Correct? So rights and obligation, in respect of assets, entity has ownership. In respect of liability, entity has obligation. And presentation and disclosure, they have given various examples. These are the assertions. These are all called as what? Assertions. Now, so we need to verify all these assertions. We need to verify all these assertions when we are conducting audit. See, literally speaking, we don't read this and do in our audit. We by default do that audit. Suppose company, they purchased goods. Now, first I understand how the company will make a purchase. Best example, Reliance Trends you take. Reliance Digital you take. How Reliance Digital store will get a TV inside their store first of all. Before they have to sell, they need to get inside the store, right? Correct? Huh? So, first, these Reliance Digital, these are all branches actually. These are the branches which are meant for sales. Showrooms, nothing but. Yes or no? Now this Reliance Digital is having right now in their store some 55 TVs which are under display. You went to store, right? Reliance store, some TVs will be under display, no? Purvika, any appliance shop if you go. Yes or no? Now, in their actual warehouse, they are having some 180 TVs. 180 TVs in the stock. How did they get this stock? They have placed order to the warehouse, the Reliance warehouse. Maybe in the Chennai they will have one big warehouse. Entire Reliance Digital will have one big warehouse. How warehouse have got this? There is some administrative office getting it who has placed order with vendor. Who has placed order with the vendor? So vendors are so many. Samsung, Sony, LG, all this, MI, there are so many vendors. From all of them, the central warehouse of Reliance Digital will place an order. And first this vendor will directly distribute that goods to the respective warehouse. And the warehouse, it will send the TV to one Reliance Digital store that is there in Alvarpet. Then they will send to Annanagar. They will send to some whatever local areas. They will distribute. Now, how the purchase happened? Now here, Reliance Digital store will, based upon their stock, once the stock value reaches to reorder level, they will place an order with the warehouse. Dear warehouse, we want TV, we are running shortage. Now customers are asking. Now what this warehouse will do? They will send the TVs to the Reliance Digital. They will sell it. Later they will again send the amount to the warehouse, or then they will send the amount to the head office later. It might happen like this, or they may directly head office will collect the sale amount. Who knows? Depends on the structure. Now, the warehouse will place an order with the head office that we want these many TVs totally. This is a breakup of a TV ordered by various showrooms. These many TVs we want of particular model. They will place an order with head office. Head office will first raise a purchase order with the Sony or LG. After they raise the order, LG will send the goods right to the warehouse. Warehouse people will not accept directly. They need to accept the goods and they need to give GRN. GRN means what? It's an acknowledgement that I received goods. Yes or no? Goods received? Note. So before I give acknowledgement, first I want PO. Who ordered? I will see whether there is a valid PO or not. Then against that I will map it and then receive it and keep it in the warehouse. Now you see how much process is involved here. Now what auditor has to check? First I need to understand what process happens. Yes, I understood the process. Then I will test some controls in this. Is warehouse receiving any TV from any vendor? Without a PO, I will have to check. Now during the year they received 150 times totally goods from vendors. 150 inflows were there. I will take randomly 3 or 4 inflows and see whether purchase order date is more than the before inflow date or not. I will see. Before inflow date only purchase order was raised, then it is correct. Suppose goods I received today, next day I made a purchase order, which means it's a weakness in internal control. So I will check like this controls. Then I will take some transactions, I will check all the transactions. So what are all I will have to check? Whether there is a valid purchase order, whether goods have been received by the warehouse, and whether goods received note has been issued, whether GRN has been issued only against a valid purchase order. Verify the purchase invoice. What is purchase invoice? Seller will give me bill no that he sold goods, that invoice, and verify the invoice quantity with the stock register. Correct? And see whether physically that many items were there available or not as per the stock register. Surprisingly, this is purchase audit. Do you think you need to read this chapter and then we need to do the audit? No. I just took this example and told you. So in this chapter, they are giving you an idea about how to verify purchases, how to verify sales, an idea they are giving you. In reality, that process we may follow, or there might be a different process. Understood or not? All of you. Now the first thing that we need to discuss is share capital. Regarding share capital, company law provisions only covered here. Regarding share capital, company law provisions covered. What you have to do, we have given company law marathon in my YouTube channel. In that, share capital chapter is there. In that, which chapter is there? Share capital. In that, share securities issued at premium, sweat equity shares, buyback, all the concepts we have clearly explained. Are you getting the point? Dividend, accounts of companies, all that we have clearly explained. Please watch them. That is what here it is covered. What is covered here is exactly how to verify shares issued at premium. How security premium account can be utilized. This is completely company law matter. What auditor has to verify? What you will verify securities premium? In order to verify securities premium, first of all, what is securities premium? For what purpose it can use? Again, it's a company law question. Understood? Next. So, this entire capital related thing, first you need to watch company law provision and then you have to come to this. Getting it? Without watching company law funds, please don't read this. This is regarding, if you see, this is regarding utilization of borrowed funds and share premium. Exactly 143 subsection 3 checklist item is there, no? Inside that last one, foreign entity, mediator, funding party, and that is given here. That is given. So whenever a company has provided any guarantee, or the company has lent directly or indirectly, getting it to a mediator, and the mediator is directly or indirectly investing in another party or giving guarantee to another party, company shall disclose the following. When our company is funding party, The funding party means our client. They have transferred some money to a mediator. It may be foreign entity. That mediator is ultimately lending to another person, whoever identified by the funding party. So who is that other person? Ultimate beneficiary. Or the mediator given guarantee to some third party on behalf of the ultimate beneficiary. If any of these transactions were there, the company shall disclose the following: date, amount of fund loaned or invested in intermediary, with complete details of each intermediary to whom you gave as an intermediary. What do you mean by intermediary? I gave money to them, but that money is not for them. That money they need to give to somebody. Then only we call it as intermediary. Date and amount of fund loaned or advanced invested by such intermediary to the beneficiary. Date and amount of guarantee in case if the intermediary is giving guarantee. Declaration that relevant provisions of FEMA Companies Act has been complied, including non-violative declaration for Money Laundering Act. The company has to give a declaration like this in the notes to accounts. Now, auditor has to get a representation here. Apart from whatever disclosed in notes, no other transaction was entered. Apart from whatever disclosed in notes to accounts, we should get a declaration that no other transaction was entered by the company. And that point we should give as a comment in 143 subsection 3. Understood or not? Same way, if the company acted as intermediary, what points company shall disclose? If the company acted as intermediary, what points company shall disclose? So that is given. Understood or not? How to do audit of reserves and surplus? This is not that important. Now, borrowings. So borrowings means what? Nothing but it's a liability. Yes or no? So what audit procedure? Briefly, what audit procedure we will take up? What is a brief audit procedure? First, we will look at the board meetings. When a company is raising money as a loan, the company means nothing but directors only have to execute. No. A director will not be given power. Sometimes to borrow money, board resolution is required. Understood? Again, if a company want to borrow money beyond the paid up capital and reserves, shareholders approval is required. Likewise, under Companies Act, they have given some powers. They have given some duties as well. So, whenever a company has took a borrowing, the company has to, we have to see the meeting, getting it, board meeting minutes for approval of the loan. During the review, ensure that loan agreements or bond were authorized. Ensure that commitments were approved by directors. Agreements what? Tally. Details of loan recorded to the loan agreement. How much loan you received, like how much you recorded in books, and look at the corresponding loan agreement. Verify the borrowing limits. How much company can borrow first of all. Roll out and obtain balance confirmation. Directly send a confirmation to lender. Tally details of leases and hire purchase to underlying agreement. Suppose if the borrower is under lease or hire purchase contract, through that a borrower has been created. Check with the agreements. In case of debentures, borrower, examine trust deed. When the debt is retired, is it discharged properly? The asset secured has been discharged from charges or not? Get a declaration that all liabilities have been recorded. All liabilities have been recorded by the company. Now, company has to obtain a schedule of short-term, long-term, auditor has to obtain a schedule of long-term and short-term borrowings, showing what is the outstanding at the beginning, ending balances, and how much is taken during the year and repaid during the year. See whether any other evidence is available like board minutes, contracts, cash ledgers, all that. Trace closing balances to the general ledgers. Nothing but simply speaking, how much is closing balance of the loan? What is the loan ledger account says? Closing balance. Something is shown in the balance sheet. Notes to accounts. Match it with the ledger, books of accounts. That's it. Actually, no, this requires a real understanding of audit, this chapter. A real life understanding is what required. Mostly this chapter is with common sense. Before you read a point in this chapter, first you visualize what you will verify in, if at all you were there. First always visualize it, then you read, you see how beautiful you will understand and remember as well. Suppose we'll do for next thing. Direct confirmation procedure with borrowings. What will you do? Like we told you, get a third party confirmation from lender. What will you do if you are in that place? Suppose if I am there, what I will do, first I will take list of borrowers. List of lenders. We borrowed, no? Who all lent us? I take a list of all the lenders. Out of them, banks will be there, FIs will be there, correct? Or some related parties might be there, correct? Now, I will design confirmation request. It may be positive or negative. Then I will send the confirmation request. Then, if at all they don't respond, I will send the follow-up request. Once the other party confirms, I will say whether the amount is matching or not. If amount is not matching, I will do additional work where it went wrong. Is it in our books which is wrong or in the other party which is wrong? And I will also see loan agreement and cross verify the terms and conditions. That's it. That's what given. Ascertain confirmation asks for all information which is necessary for loan, like what is the rate of interest, due date, security, whatever be given. When you are asking for confirmation, don't only ask what is outstanding amount. Ask whatever you want in the confirmation. Next, if at all there is no reply, send a reminder. Correct? Now, once you got reply, compare balances or as per confirmation balances with the books of account. If there are any difference, do reconciliation. Test the supporting documents for reconciling. Correct? So imagine first, then look at here. Most little match. Next. Now, at what value we should record the liability? At what value we should record the liability? Whatever is outstanding. Whatever is outstanding. How do you check whether the amount outstanding is this much exactly? How do you check? First I will look at the loan agreement in order to know how much loan I received. Then I will look at the bank statement, how much is actually received. Then I will see how much is paid during the year. I will see the breakup of interest and principal. Then balance outstanding is shown in the balance sheet. And see, outstanding amount considers accrued interest but not paid. All these points I should check, right? Same will be there, you see. Determine first accounting policy and methods for recording the debt. By using what policy company is using for recording the borrowing. Here there will not be any policy generally. For borrowings, what policy? I borrowed a loan. I will record it as a non-current liability if the duration is more than 12 months. Tally loan balance and loan payable to loan agreement. Correct? Recompute interest and discount premium on redemption if any. Company said some discount is there, company said some premium is there, I will recompute. Check computation of amortization, premium or discount. Amortization where we will use? Not that. This is regarding loans. Interest can be either we can call it as amortization or we can also call it as discount in case of bills. Getting it? For foreign currency loan, check accounting standard 11 requirement satisfied or not. Then further, look at the loan agreement and read. Is the entity complying with loan provisions or not? If there is any provision which the entity is not in compliance, whether that should be classified as correct. See whether is there any waiver amount by lender. Lender did, if at all anything is waived, that should not be shown as liability. Examine due dates on loans for proper classification between long term and short term. That's what I told. If the loan duration is more than 12 months, non-current loan. Otherwise it's a current loan. Suppose if the installment of long-term loan falling due within next 12 months, it should be, has been disclosed in financial statements. You need to disclose what are all the loan installments that are falling due within the next 12 months. You need to disclose it as a footnote. These are all requirements of Schedule 3. What we are reading here is nothing but requirement of Schedule 3. And auditor has to verify Schedule 3. Schedule 3. Able to understand? All the requirements of Schedule 3 we have to verify. And how to audit them. For that, there is a guidance note on audit of assets, guidance note on audit of liabilities. So, that entire Schedule 3 content guidance note is copy pasted in this chapter. Understood? Look at the important terms in the loan agreement and document and see the charge has been created or not. And whether requirement of applicable statute regarding charges, company law provisions for charges have been satisfied or not, check it out. Suppose if the value of security falls below the amount of loan outstanding, that balance amount of loan where there is no security should be shown as unsecured loan. In case of hire purchase, look at the hire purchase agreement. And in case if the loan is borrowed from related parties, see AS 18 compliances. Verify liability towards banks, bills discounted or disclosed correctly in the financials. See that whatever loan borrowed is within the borrowing powers of the company. Companies Act provisions were there, 185, 186, all that. Directors' powers, all that. Verify section 180, borrowing power under Companies Act. For what purpose the loan was borrowed, for what purpose it is used. If it is not used against the original purpose, why there is a diversion of fund. If at all, especially if it is a bank loan or financial instrument loan, debentures or term loan. Getting it? If there is a violation in purpose, it has to be mentioned in the CARO. And the company has to disclose loans in the following. Loans in the form of bonds, term loans from banks, from other parties. Any deferred payment liabilities, deposits, loans, advances from related parties, finance lease obligations, other loans. Borrowing shall be subclassified again into secured or unsecured. If at all any loan has been guaranteed by directors or others, the aggregate amount of such loan shall be disclosed. How much is guaranteed by others? So what is the disclosure for bonds, debentures? They have given additional matter. If any bonds have been redeemed, okay, whether the company has power to reissue them. Redeemed bonds sometimes can be reissued. So almost entire these points are like, it is not something where we explain. Getting it? It is something you have to read and visualize. That's it. All these points are not required. Any 4 or 5 points only you may have to write. This is regarding Schedule 3 disclosure requirement. This is regarding Schedule 3 disclosure requirements. In a regular class, what we do, in audit. 5 hours Schedule 3 class first we will give. First watch that Schedule 3 video. By our accounts faculty, he will explain. So 4 to 5 hours purely Schedule 3. Complete Schedule 3 will be discussed. Then only we will ask them to watch this chapter. Understood? Items of financial statements is approximately 8 to 10 hours chapter, including Schedule 3. That too, we can't discuss in depth entirely. Because it is saying what? Check that, check this, check that, check this. Now you tell me whatever is there, I am just repeating it. Is there anything that I can add here? It is asking me, agree whether loan outstanding amount is matching with the agreement. What I can tell you in this? Instead of what I'm doing, I'm slightly simplifying. Tally loan outstanding amount with outstanding balance as per the statement or with the loan agreement. Check it out. That's what I'm telling. Understood? So this is disclosure requirement. This is completely disclosure. And you see here there is a another requirement where company has borrowed from banks FIs on the basis of security of current assets. It shall disclose, which means it's additional requirement under Schedule 3. Schedule 3 also should disclose. Even in CARO also we should disclose this point, working capital loan. Whether quarterly returns, statements filed by company with the banks are in agreement with the books. If not, summary of reconciliation and reasons has to be disclosed. Company has to disclose why there is a difference. Now whether the company has been declared as willful defaulter, date on which it was declared as willful defaulter, details of the default. Who is a willful defaulter? They will ask you a 3 marks question. They will give you a question on this. 3 marks question. Write about disclosure by the company if the company is declared as willful defaulter. That's it. Student will write CARO point. Correct? But this is not CARO point. This is a disclosure in Schedule 3 by the company in respect of borrowings. If the company was declared as willful defaulter by any bank or financial institution or other lender, the company shall give date on which it was declared as willful defaulter. What is the default? Amount and nature of debt. Who is a willful defaulter? He is a person or an issuer of debentures. Getting it? Which is categorized as willful defaulter by bank FI. Getting it? As defined under the Act, or consortium means consortium banks in accordance with guidelines on willful defaulters by RBI. Issuer means nothing but issuer of bonds. Issuer of bonds. Same way, company has to check, company has to disclose what are the charges that created by the company, out of which how many charges were satisfied, means charges were removed. Understood? Charges chapter, you know, in the company law. Charge means what? Charge can be created in mortgage, pledge, hypothecation, anyway. Charge means I'm having charge over the asset. Getting it? Next. Same way, company has to disclose utilization of borrowed funds and share premium. This point again repeated. This point a company again repeated. When the company have not used borrowings from bank FI for specific purpose for which it was taken, the company shall disclose. Where they have used, diversion shall also be disclosed. This is Schedule 3 requirements. Understood or not? Without reading all this, if you go to exam, if a question can come from any of this, whatever is highlighted in bold letters, no, important. Utilization of borrowed funds is again, same, that intermediary, foreign entity, the same point only given. Then, how to do audit of trade receivable? Tell me how to do audit of debtors. You just think of it. In the balance sheet, there is a debtors amount shown some 50 crore. Company has to receive debtors 50 crore. The company showed debtors outstanding for more than 6 months some amount, remaining some amount. Understood? Now what I will verify? First I will take list of debtors. Then I will take sample. Then I will trace to the sale entries in the books of accounts. Then I will say, first of all, on what basis company sell goods to the customers on credit. I will look at the credit worthiness policy of the company. On what basis company will sell goods to customers on credit. Then I will check. I will send external confirmation. In this debtors verification, external confirmation is important. How do I send external confirmation? Same process. First select the debtors. Select the conforming party, nothing but. Then design the confirmation request. Send the request. Design the request in such a way it covers all the details. Like what is the outstanding amount? When he is expecting to pay. Getting the point. So all that full details we have to, maintain that. Now what auditor has to check with respect to debtors? Auditor has to check whether controls are in place to ensure that invoices cannot be recorded more than once. And receivable balance automatically recorded in the general ledger from original invoice. Company will not record the debtor separately. When sale entry has been passed on credit, naturally customer account will be credited. Customer account will be debited. That we need to receive from so and so customer this much. In a bank, no. When you withdraw money, do banker has to update your balance manually? It automatically comes from same. Ask for period end receivables aging report as on 31st March. Aging report you take. How many debtors were outstanding for more than 30 days? How many debtors were outstanding for less than 30? More than 60 but less than 90? More than 90 but less than 120? More than 120? More than 180? Get a aging report. And trace the balance as per the report to general ledger. So aging report says so and so customers are having outstanding for more than 180 days. List of the customers, look at the particular general ledger account, their ledger account. Check whether realization is recorded invoice wise or not. We generally, debtors collection from debtor, no, we will account it on FIFO method. Suppose I sold goods to you from past 10 days, every day I am selling you 1 lakh. Today what is your outstanding amount? 10 lakhs. 11th day onwards you will pay me money. Tomorrow you paid me 1 lakh or tomorrow you paid me 3 lakhs. I should adjust it for first 3 bills. Yes or no? So whatever the amount you are giving me, first I should adjust it for the old invoice wise. Whenever we receive from customer, we should adjust it against a sale. So right now, as on today, if I open debtor's outstanding balance, which invoices related amount is pending, I can talk to the debtor. If not, check money received from debtor is adjusted chronologically. That is FIFO basis. இப்போ வரைக்கும் FIFO na inventory la da கேக்குது. Yes or no? FIFO means what? It's not inventory valuation method. FIFO means first in, first out. First whatever debtor I made a transaction, that I will adjust it. In case of large balance is due for long time, what is the reason? Justification. Especially here, auditor has to check whether provision is required or not. Confirmation procedure. They'll ask you a straight question. Write about direct confirmation from trade receivables. How auditor will execute, how auditor will apply direct confirmation for trade receivables. A significant and important activity is to contact customers directly and ask them to confirm amount for unpaid receivable as at 31st March. An important activity on 31st March is contact the customer and ask him what is outstanding balance. This is necessary for all big accounts. While certain random customers having small outstanding may also be selected, small balances also select. But for small balances, we send a negative format of request. Generally, we send what? Negative format. Now, external confirmation is of two types. Positive confirmation request, negative confirmation request. Positive confirmation request means, I will type the confirmation letter like this. We are the auditors of ABC Private Limited, were appointed for conducting audit for the financial year 21-22. And as part of our audit program, we found that your account is having outstanding balance as on 31st March and not yet paid today. On the date on which we are sending confirmation, within bracket we will mention the date also. On today it is still outstanding. The amount is 10,50,000 rupees. Kindly confirm within 3 days from the date of receiving this confirmation request. Okay. What is the outstanding balance in your books of accounts? Dash. They have to fill it and then send me. Now here, reply is must know. Correct? Huh? He has to give reply, because I am asking him to fill it. If at all, within next 3 days he didn't reply, what will I do? I will send a follow-up mail or I will call him and remind him once again. Understood or not? Negative request, how it looks like. First pair I say, in our books of accounts, in the audit, in the client books of accounts, we found that your account is having an outstanding balance of 10,50,000 rupees. Full stop. Reply within 3 days if you disagree. Understood? If you disagree, please reply within 3 days. Otherwise, ignore. Within 3 days, if at all reply came, within 3 days, if reply came, what is the answer? No. See, some third parties, they will reply even if they agree. Suppose if at all, I told him only if you disagree, reply I told. Suppose he replied by saying everything is matching. Will you punish him? That is his choice. Suppose within 3 days if you didn't get reply, what will you assume? Amount is matching. That's why the third party did not reply. Yes or no? All of you, this is what you assume. Now tell me, in positive format and negative format, which is superior? Positive is only superior. I'll have evidence here. Negative, no, I sent a mail, he forgot to see. He didn't check the mail. 4 days over, 5 days over. What I assume? Everything is matching. But in reality, he didn't check. He didn't see that he got a mail. Yes or no? Now, actually balance is materially misstated. And the mistake is in our books only, not his books. Client is perfect. The third party is perfect. Our client only problem. Now tell me, I will misinterpret no. So positive confirmation request is more persuasive than negative confirmation request. Now you may say, sir, in such a case, for everyone we can send positive. No. That's why standard gave a list of conditions where negative confirmation request can be used. Where negative confirmation request condition can be used. That format can be used. 4 or 5 conditions were given. 1. A confirmation in respect of the outstanding balance which you are sending is homogeneous, immaterial, small items, numerous were there. Second condition, all have to be satisfied. Low exception rate is expected. Have you seen SA 505? Everyone say SA 505 easy, I know very well. Tell me this answer. A low exception rate is expected. What is the sentence meaning? The possibility that the whatever our books, client books balance and the other party is confirming, no, both will match. Mismatch possibility is low. Mismatch means what? Misstatement. Exception. Exception, there is a definition for SA 505. This is also one more question. If at all anybody says, I know auditing very well, ask him what is exception in SA 505. You ask him. 90% they can't tell. Tell me what is SA 505. SA 505 சொன்னோனே external confirmation. அவ்வளவு தெரியுமா உனக்கு? Exception என்ன? Only one definition is there. 3 definitions are there in the SA 505. Positive confirmation request, negative confirmation request, exception. What is exception? It's a difference between amount requested to be confirmed by the auditor or amount contained in entity records and amount confirmed by third party. Whatever confirmation received, whatever there in our books, if there is a difference, we call it as exception. If you identify exception, what will you do? Will you scold the client? What will you do? First, you will resolve whose books of accounts it is wrong. Is my client made a mistake in financials or the other party? I will open entire ledger. I will ask him his ledger. In his books, my ledger is there, no? In my books, his ledger is there, no? I will cross verify. In his books, credit means in my books it is debit. I will cross verify. Whatever untallied amounts is there, what happened, I will inquire. I will see. If our accounting is correct, then our balance is correct. There's only wrong. Exception is not necessarily a misstatement. I'll give an MCQ or I'll give a correct or incorrect question. An exception in case of an external confirmation is to be treated as a material misstatement in the financials. பாதி பேர் இந்த கொஸ்டினே புரியாது. நான் சொல்றனால you are able to identify. Getting it? These kinds of questions will be asked. So, a low exception rate is expected. The possibility that the other party and my books, the possibility of difference is low. Then you send negative confirmation. A low non-response rate is expected. The third party always will respond. He is such a kind of disciplined person. To him, you send negative confirmation, no problem. If at all he read it, if at all he didn't reply within 3 days, I can happily assume he have definitely read it. Because he is such a kind of third party. Even if you send greetings, he'll reply, thank you. For every greeting you say, he'll reply. Such a kind of third party, nice party. The chances of non-response is very low. Understood or not? These are the conditions. If all these conditions are satisfied, then only you can use a negative confirmation request. Clear? Now, the auditor employs direct confirmation with the consent of the client. First of all, direct confirmation, if you want to ask, send to the other party, first take client consent. So that's why you see in SA 505, you have if management is refusing to you to get an external confirmation, ask for reasons. Try obtaining evidence alternatively. If management refusal is unreasonable, alternative evidence is also not possible, give modified opinion. Take appropriate action as per SA 705. That's what they say. What is action in 705? Modified opinion. Understood or not? So that entire procedure is given. Understood? Can you read this later? Suppose if you do not receive any reply, alternatively you should do like see whether cash is received subsequently. As on 31st March is outstanding means still I am doing audit in June month. Okay, I have not yet completed my audit. Audit report is not yet given. 31st March 10,50,000 outstanding means somewhere in April or May he would have paid. No, see whether is he paid or not. He paid. If he paid means it's a confirmation that he is outstanding to our organization, right? So all this, and with respect to related parties also get external confirmation, all that. This is cutoff completeness. This is cutoff, especially last 5 days in the reporting period. No, all last 5 days. See, I'll give you one example. Stock in transit will arise in whose books of accounts? Buyer books of accounts or seller books of accounts? Stock in transit will appear in whose books of accounts? Ellaru tappuda. It depends upon the control is with whom. Purida? It depends upon. If at all you all told me depends on the situation, sir, I would have appreciated. எல்லாரும் ஃபிக்ஸ் ஆயிட்ட செல்லர் பையர்ல போத் யார் இப்ப சொல்றது? Okay, it depends upon the control is with whom. with whom the risk and reward is. Getting it? Very simple. I came to Chennai. I went to some manufacturer. I purchased 5 tons of some raw material. I paid money. I only contracted one lorry. Big truck container. Loaded the goods into the container. Bye bye I told to manufacturer and I started leaving. Now if something happens to the truck, if something happens to the goods, whose responsibility? Buyer or seller? It's my truck, it's my authority, it's under my control. Now it is in my control, right? As on 31st March in my factory, which is there somewhere in Rajasthan, I have not yet received the goods. 31st March it is on the highway. Now stock in transit. Seller, no, he sold goods, delivered goods also, risk and reward transferred. He will treat it as that cash account debtor to sales account. Over. Stock and all will not appear for him. In my books, purchase is over. Purchases account debtor to cash. Now goods are there, no. Stock I should show, no. Is it in hand? It is in transit. In whose books it came? Buyer. Understood. Situation different. I ordered, gave cash, and I asked him to deliver at my factory in Rajasthan. If at all something went wrong in between, he should only bear loss. I don't have any trouble. Only if I receive in my factory, I will give you balance payment. This is the condition. The buyer seller also agreed. Now as on 31st March, I paid money, some amount. Did I purchase goods? Did control came to me? Advance given to supplier, to cash account. Now the other person, did sale completed? Risk not transferred, no? Until delivery at my factory, risk not transferred. As on 31st March, so sale cannot be recorded. Whatever amount he received, how he will reward, how he will record? Advance received from customer. Now, in the stock, in the go down, is stock available? Not available. But where is it? It is in the transit. So, he will reduce from stock in hand that amount and put it under stock in transit. Now, in whose books it came? Seller. Depends upon risk and reward is with whom. Understood or not? All of you. Understanding accounts means this. How much to be debited, how much to be credited, not that. That system will take care. You need to understand this. Are you clear? These kinds of accounting. See, application of accounting principle means what? This only. Risk and reward transfer. Accounting standard application means this. Next. So we apply cutoff. Whatever I told right now, it is called as what? Cutoff technique. What we do is, all purchases and sales, we apply cutoff procedure. What we do in cutoff procedure, Suppose last 1 week purchases which are debited in profit and loss account, I will take list. See whether control is received in our organization or not. Whether goods received inward in our control or not, I will check. Only in respect of goods that came into our control before 31st March or on or before 31st March, they shall only be recorded as purchases. Correct? Same way, whatever goods we sold, only risk is transferred by 31st March to others. Then only we should show it as sale. Otherwise, how come it is sale? Company will do frauds in this. As on 31st March, they will create fake sales. See whether goods were delivered ultimately. Check it out. Understood or not? All of you. Ensure that all the goods are dispatched prior to year end. Sales, no. Debtors, no. So we need to see whether every good has been dispatched. Okay, on a test check basis. Ensure that no goods are dispatched after year end have been invoiced and included in debtors under the audit period. If any goods were dispatched after reporting period, 31st March, and if that goods which are dispatched means delivered after 31st March, if at all they are recorded as sale in the current year, is it right? That's what they are saying. Understood or not? People ask me, sir, how to remember this chapter? How to remember this chapter? Eppadi remember panna mudiyudalla? Without understanding, how will you remember? So I am giving for trade receivables. Similar logic apply for? Exactly. Very good. Smart students. Next. So, same way, test check invoices which are listed in receivable report. Take few invoices from debtors aging report. Compare them with the supporting documents. See whether amount is correct or not. Correct customer credited or debited or not. On which date it was entered into the books. All that you have to check. Match invoices, sales to shipping, dispatch log. Delivery challan will be there. GST e-way bill will be there. So check that. And if any customer was given discount, look at the discount process, incentive process, all that. Now, how to check whether trade receivables were valued properly? In exam, they will ask you all these questions separately. They may ask you only this question. Suggested answer will contain this. Your answer will be containing this. Understood? Observe what you are reading. Here, we are checking valuation. How to check debtors value. Here, how to check whether debtors are accounted completely. Cutoff means completeness provision. Whether whatever debtors were shown under this year, are they belonging to this year or not? That is what completeness means. Valuation means what? I am not worried about accounting of debtors. I am worried about recoverability. Valuation, I focus on what? Provision for bad and doubtful debts, all that. Aging report, I will check 30 days, 60 days. This is tally. List of debtors under litigation. Compare with previous year. Identify those debtors which appear doubtful. Discuss with management. When they will be coming, ask them. See whether provisions are made at appropriate percentages considering recoverability. See the movement of bad debts, provisions, all that. See if any write-offs were there. Is it written up by proper authority or not? Check it out. Are you clear? Now, disclosures related to trade receivables. What trade receivables shall be disclosed? Trade receivables shall be disclosed as below. Trade receivable shall be disclosed as below. Undisputed trade receivable considered good. Undisputed trade receivable considered doubtful. Disputed trade receivable but considered good. Disputed trade receivable considered doubtful. Ivulla classifications kamikno. Adula thiripi inside that how much is outstanding for less than 6 months, how much is outstanding between 1 year, 6 months to 1 to 2 years, 1 to 3 years, more than 3 years. This is something similar to banking norms. Purida, able to understand? Similar information shall be given where no due date on payment is specified. Suppose some goods were sold on credit but payment due date is not fixed. Unbilled due shall be disclosed separately. So trade receivable shall be subclassified again. Secured considered good, unsecured considered good, and doubtful. Understood how it is? Here undisputed, disputed classification. Here it is secured, unsecured classification. In both the cases, good or doubtful you have to show separately. Understood? Good and doubtful are different. Bad is different. Bad debtors means you write off. You should not show. Debtors treated as bad means bad debts. You will not show it in the balance sheet. Understood or not? Then how to do cash and cash equivalent? Special care is necessary here. Elladke special care irukum. Purida. In this point, if there is more than one cash balance, in all the cash balances wherever company is maintaining shall be verified simultaneously. Very simple. Suppose if head office is maintaining separate cash ledger, branch is maintaining separate cash ledger, petty cashier is maintaining separate cash ledger, it's okay. I can verify independently. But there is only one cash ledger. In this cash ledger, 10,50,000 rupees is there or 10 lakhs is there cash as on 31st March. Where is this 10 lakhs? I asked accountant. Sir, 7 lakhs is with the cashier, 1.5 lakh with the production manager, 1.5 lakh is with the sales person. Now, I should physically verify cash whether really there or not. Surprise check I should do. Surprise means what? I will intimate them 2 days before and then go. Surprise means what? Without intimation I should check. Now when you are doing surprise check, total balance is matching or not, you should check no. Now total balance is with 3 persons. You should check 3 persons simultaneously or one by one. Simultaneously. So send your 2 team members to those 2 persons on the same time. And now also you go here and then check surprisingly. Understood or not? Next. In audits, surprise check is only on the paper. Neither the client feels surprised nor the auditor. In reality. Getting it? This again you can understand. Confirmation procedure. This is regarding bank balance available with the bank. Margin money available in demat. All that. Getting it? Now how cash and cash balances shall be disclosed in the balance sheet? Balances with banks, checks on hand, cash on hand. Earmarked balances with banks. For example, dividend declared account, unpaid account, CSR unspent money. All these are earmarked balances. Balances which are held as margin money. Amount held in share demat account. Repatriation money. Bank deposits with more than 12 months maturity, fixed deposits, they shall be disclosed separately. Then inventory. Inventory is also important aspect. Inventory, debtors is important. Compared to cash and cash equivalent, inventory, debtors, borrowings. Borrowings, you see below, so many disclosures were there. Yes or no? So borrowing should be disclosed. The borrowings point is completely important. Debtors is important. Inventory is important. Understood? Next. So we'll take small break. Okay. Mostly I think Rumba heat edukle. I mean mind. We'll take break. I know. Because this chapter I think you might have understand. Now to understand this chapter you must understand so many other things. Correct? Hey, honestly tell me how many of you have gone through this chapter already? Once or twice or whatever, have you gone through or not? Understood? Appo enna padichachu neenga? Okay, fine. Now you are able to read. After this class, will you be able to read? Now will you understand? So in the next whatever I am going to cover also, I will be covering in the same way. Totally 2.5 hours will be spending on this chapter. 2.5 to 3 hours. That's a revision. Getting it? So with this, you read once again this entire book slowly, one by one point. Understand what that point convey. All typical points I am covering. Getting it? Then only move to the next. If you see, after you read each and individual point, once you summarize what is there. Summarize means what? Once again, the entire points, what is there? Okay, first I should check this, I should check this. Why you should check this? Logically analyze. Understood? Yes. So come back, take break and come back in 15 minutes. So let's continue with the discussion on audit of inventory. Like just I spoke about one of the aspect in inventory, that is regarding inventory in transit. Yes or no? Like we'll see now. So they will ask you a question regarding what is the audit procedure that you will undertake or that you will perform in order to establish existence of inventory at period end. As on 31st March, the balance sheet is showing some value of inventory. What audit procedure, what procedure you perform to get an evidence that this much inventory is existing? It's very simple. First I will look at organization plan for performing inventory count at 31st March and see that the goods have been segregated. If possible, participate in inventory counting with the management. That's what SA 501 also says. Audit evidence, specific considerations for selected items. SA 501 selected 3 items. What are they? Inventory, segment information, segment litigations and claims. Here I will tell you how to read in this. Inventory, what SA 501 deals. Option A, existence and valuation. Option B, existence and condition of inventory. Option C, existence, condition and valuation of inventory. Option D, condition and valuation of inventory. C, existence, condition and only existence and condition of inventory. SA 501 deals only with regard to existence and condition, not valuation. Understood or not? This is a question asked in MCQ, case-based MCQ. So this is how questions will come. You need to understand clearly. Okay, SA 501 is talking about only existence and condition. It is not nowhere talking about valuation. What SA 501 says, auditor has to attend inventory counting performed by management at year end. If attending at year end is not possible, plan some other day. Or if management is not doing inventory counting as on 31st March, plan some other day. If that is also not possible, you fix particular day and you go and visit and count physically. If inventory counting is impracticable, consider the implications on auditor's opinion. If inventory is lying with third party, Get external confirmation. If you have doubt over that confirmation, arrange another auditor to go and physically count and then come and then compare with the books. Understood? This is what SF 501 regarding existence and condition of inventory. Selected item is inventory. What consideration you should check here? Existence and condition. Litigations and claims, what you need to check? Completeness of disclosures. Segment information, what you should check? Disclosures as per applicable financial reporting framework. Are you getting it? Understood? Test count. Auditor, if possible, he has to do test count. What you will do, what you will do in this test counting of inventory by auditor should include what you will do. Observe how employees are counting. Ensure that all items are tagged. Tagged means what? Tags will be there, no? And assure that there is appropriate supervision on count procedure. Observe that amounts are shown properly on the tax. Determining the tax and summary sheets are collected and reconciled. Reconcile test counts with tax summary sheets and discrepancy notice, if any, you need to discuss with client personnel. Be alert at all times, specifically cautious about empty boxes and obsolete items. They may show you warehouse, these are the goods available. You don't just count the boxes. See whether any box is empty. Perform cutoff, like last 5 to 10 days. See when the goods are actually received, when the goods are actually delivered. Check it out. And please exclude inventory belonging to third party but held by you. Suppose third party sent you goods to sell you on sale or return basis. Right now goods are with you, but you have not yet given acceptance. Is it your own inventory? That should be excluded from valuation. Ensure that accounting of all stock sheets, just check the stock sheets. If there are any differences between physical stock and stock record, investigate. Suppose if the organization is using periodic inventory system, please undertake at the end of the period inventory. If the entity uses perpetual system, anytime you can take physical inventory counting. If the inventory is with third party, get a confirmation and perform analytical procedures. Compute inventory turnover ratio, perform vertical analysis like inventory to assets analysis, compare budgetary expectations with actuals, examine non-financial information like weights, measurements, all that, perform cutoff test regarding shipping documents, all that. With regard to tagged inventory, perform test for omitted transactions and test for invalid transaction. Is there any transaction which are omitted, like some tag is there but it is not recorded in books? Verify clerical and arithmetical accuracy in the inventory listing. Here, what is the audit objectives? How do you verify that only inventories belonging to the entity have been recorded and do not include inventory belonging to third party, and does not include inventories but does include inventories owned by entity lying with third party? How do you verify? So all these points verify. The entity has a valid legal ownership rights over the inventories which are held by the entity and contained in the records. Look at the purchase documents. See whether any goods are consigned. Correspondence, sales, all that you check. Determine collateral agreements if any available. Consignment deeds you check. Material purchase commitment agreements you check. Auditor shall obtain confirmation if at all inventory is with third party as per SA 501. So all that. Now you need to check regarding valuation. How auditor should verify? What auditor should verify in inventory? Regarding getting evidence regarding whether inventory has been valued properly or not. First to look at what method they are using. Weighted average, FIFO, LIFO. For raw material, what components are included as part of cost? AS2. What is the valuation like principle? Getting it? What is forming part of cost of raw material? What is forming part of cost of work in progress? What you will form part of finished goods? All that you need to check. If standard cost technique is used, what is the basis for standards? What are the elements of cost that are included in the inventory? All that cost, purchase price plus all that cost that has been incurred up to bringing the inventory to the present location, all that cost has to be added, yes or no? See the cost prices used with purchase invoices. If any damaged inventory is there, that should be given provision for that. Work in progress, how the stage of production has been arrived. Finished goods and goods held for resale. So see whether the finished goods are determined based on the normal cost, whatever is incurred or not. Ensure that inventories are valued at NRV or cost, whichever is lower, especially if the finished good is about to sell at a price less than cost, then goods must be valued at NRV. And if items are absolute damage, slow moving, what is the possible realizable value? Carefully examine what is the valuation of damaged inventory. For this purpose, auditor may request the client to provide inventory aging. Inventory aging means what you know? Inventory is produced, finished good, but could not be sold. It was produced, but not yet sold till today. The gap is more than 180, less than 180, less than 90, less than 60, less than 30. If the inventory manufactured is very latest, it's okay. The inventory is long outstanding, obsolete, old, outstanding inventory. Create provision for that. You observe, when you're reading, observe what I'm reading exactly, valuation. That's why these points are covered. Okay, if I'm reading these points, it's about valuation. And all these points you see, they're only talking about provisions and all, which means regarding value of the item they're talking about. Confirmation from creditor, confirmation from debtor. It is talking about the ownership of the inventory, physical existence of the inventory. Understood or not? Next. And see whether disclosures of inventory has been made as per schedule 3. Inventory should be classified as raw material, work in progress, finished goods, stock in trade. And stock in trade means, remember, stock in trade means the goods which I purchased and held for trade. That's called stock in trade. Where I'm a trader, I will use the word stock in trade. If I'm a manufacturer, I will use the word finished goods. Able to understand? And loose tools and others. Whether goods in transit have been disclosed separately under the subhead. Which goods in transit will come, I told clearly. If the goods are in transit and the goods which are under our control only should come in our books of accounts. And what should be the mode of valuation? FIFO, LIFO, weighted average shall be stated. These are the disclosure requirements regarding inventory. They'll ask you a question. They'll ask you a question on this. Write about analytical procedure on inventory. They'll ask you only this question. Write about analytical procedure in respect of inventory. Getting it? You need to write regarding this. Read this carefully and then look at the right side carefully. What is the nexus between these two? Understand. Clear? Next is regarding fixed assets. Fixed assets. So first, how do you verify whatever assets shown in the balance sheet? Are they existing or not? How to verify? Physical verification. Existence can be confirmed only by physical verification. See whether proper supervision were there on property, plant and equipment. See the physical verification report. Look at the worksheets which are performed by entity. If all items are properly tagged, physical assets also, the fixed assets will also be having tags. In organizations where number of assets are having very high, there will be fixed asset identification number. What is it? Fixed asset identification number. To go any big temples, you will find numbers on all the fans, chairs, numbers will be there. Getting it? So that is actually called asset tag, asset identification number. Getting it? Reconcile items of PPE as physically verified with the fixed asset register maintained by entity. Verify discrepancies noted and how they were dealt in the books of accounts. Suppose shortages not in working condition or active use should be accounted as deletions in the books. Assets which are not in use or which are not active usage or obsolete, out or damaged assets, it should be deleted from the fixed assets. It should be shown under scrap. And see the movement in PPE. Whether additions to PPE has been recorded in the financials. They will ask you how to do audit of additions to property, plant and equipment. They'll ask you exclusively this question. Now, first thing you need to check is movement. Additions during the year, deletions during the year, and see the closing balances matching with the books. Check the arithmetical accuracy of movement. Tally opening balance to previous year. Whatever opening balance is there in the current year, last year it is closing balance year. Obtain the list of all additions from management. For all important additions, whether expenditure meet with PPE recognition criteria, check it out. The cost include cost incurred initially for constructing the PPE and cost incurred subsequently to bring it to the present working and condition. Verify it is valued as per AS10. and verify and ensure that items such as spare parts, standby mission, servicing equipment is also recognized as PPE only when they are held for more than one period, means nothing but one accounting period. In relation to deletions, whenever some asset has been sold, ask the reason, what is the logic or rationale behind deletion and manner of the sale, and see whether it is properly authorization is there or not. Verify process followed for sale, check it out. Is the sale accurately recorded? When any asset is sold, only WDV value of that asset shall be reduced from the books. Whereas in income tax block, you will reduce sale value. Remember in block 32 format. And now it is regarding valuation. What audit procedure you will take in order to check whether PPE has been properly valued. Verify that entity charged depreciation on all PPE unless it is non-depreciable. Assets that the depreciable, check the depreciation method used reflects the pattern in which the asset is used. Suppose if it is furniture or building, SLM is suggestible. But plant and machinery, always WDV is suggestible. Suppose if the mission is based on number of hours working, number of units, then number of hours method or number of units method we have to follow. So it could be straight line, value method, unit method, whatever. So the auditor should verify whether management has done impairment loss assessment. And next, how do you check whether company is having ownership, rights and obligations? Now look at the title deeds. Yes or no? Legal valid owner or not? Verify the title deeds, conveyance deed, sales deed. Insist original title deeds for all the immovable property. In case entity has immovable property as security for any borrowings, original title deeds are not available, the auditor requests the management for getting confirmation from the lender that the lender is having the top property title deeds, equitable mortgage or registered mortgage. Verify charges register filed under ROC. You can go to MC and find what are all charges against the company. Charges list you can find. And disclosures of PPE shall be given as below. Land, buildings, plant and machinery. This is class of PPE. This is each class of PPE. So land, buildings, plant and equipment, furniture, vehicles, office equipment, others. Assets under lease shall be shown separately. Which assets? Finance leased assets only will come. Operating leased assets will not come in balance sheet. And not only that, gross carrying value, net carrying value, breakup, entire thing must be shown separately. And whenever there is any revaluation, if the change is 10% or more in the aggregate net carrying value of each PPE, that details also shall be shown. So rest all are disclosure. Suppose company has to give additional disclosures. If title deeds of immovable property were not held in the name of the company shall provide details of all the property whose title deeds are not held in the name of the company in the format given below. What? Relevant line item in the balance sheet. Example, investment property. What is the property? Land and building. Gross carrying value, how much? Title deeds were held in the name of whom? Whether title holder is a promoter, director or relative of a director, promoter or employee. Who is he? Check it out. Property held from which date? Reason why it is not in the why it is not held in the name of the company. Tata Motors gave disclosure on this. Relative here means company sect relative. Promoter here means promoter of the company. Where the company has revalued its PPE, whether it has been done by a registered value or not, you have to disclose in the notes. Auditor also has to check this, but company should disclose. Same way, capital work in progress, aging schedule shall be given like this. Amount which is involved in work in progress for less than 1 year. The project is in progress between 1 to 2 years, 2 to 3 years, more than 3 years. L&T Metro, CMRL company. They will show so-and-so project, L&T, some project more than 3 years work in progress. They will show like this. Total shall tally with the closing work in progress amount in the balance sheet. Suppose if the work in progress completion is overdue or has exceeded its cost compared to original plan, or the company shall disclose the following. When it has to be completed in 1 to 2 years, to be completed in 2 to 3 years, to be completed in more than 3 years, project 1, project 2, likewise you need to disclose. Intangibles, what auditor has to verify? How do you verify existence of intangibles? Patents, you will have patent certification. Copyrights, you will have copyright certification. And trademarks, you'll have trademark certification. Getting it? Additions to intangible assets. See whether it is valued as per AS 26 intangibles or not. So similar, if it is more or less similar to fixed assets. If you look at PPE, it is more or less same. What should be the disclosure requirement for trademark? It should be disclosed goodwill, trademarks, software, publishing titles, water titles, mining rights, and copyrights and patents, recipes, formulas, methods. These are all applicable for different industries. Licenses, franchises, and others. Send gross gross carrying value, net carrying value, breakup, revaluation, all that shall be given. Here also aging, capital work in progress, aging we are giving no. Here also intangibles under development, aging should also be given. Same here also, if any intangibles are not in the name of the company, that detail shall also be given. But anyhow, for intangibles, it will not come like that, not in the name of the company. It will not come like that generally. Then trade payables, I told you, this is exactly similar to trade receivable. All the points of trade receivable will once again appear here. But here it will be reversed it will be recorded as a reverse direction. Trade payable is lengthy. Now, how do you verify loans and advances? How do you verify loans and advances? This is also very less the possibility. In this entire chapter, please read from ICI study material only what? You have to read the following items. You have to read the following items. Everyone please make a list. Borrowings, which is liabilities. Okay. Borrowings. What are all the things that you need to compulsorily read in this chapter in full without ignoring anything? You see, in borrowings, they will ask about valuation a question. In borrowings, they may ask you regarding existence. In borrowings, they may ask you regarding question regarding completeness. If you write some other answer, you will not get marks. So anyway, they can ask. You need to observe and then read. Then only you can write correct answer. Now, what are the things that we have? Liabilities, assets, incomes, expenses. These are the things which we are having in the items of financials. Liabilities, you just have to read. Borrowings mainly. Then you need to read share capital provisions. In company law. This is important. You need to read share capital provisions in company law. Assets. You need to compulsorily read trade receivables. Then you need to read inventory for sure, completely. You must read inventory and trade receivables completely. Then if possible, PPE alone you read. PPE. Intangibles not required. PPE related again. Existence you have to read. Completeness you have to read. Valuation you have to read. Rights and obligation. Understood? Incomes. Incomes, I think not much important thing is there, but interest income, dividend income. This question is something which is asked very frequently. Investment income. This is something which is frequently asked. Then expenditure. Operating expenses and purchases. That's it. In purchases, more importantly, analytical procedures. But anyhow, entire purchases, please read. These are the important things. At the first of this chapter, when we are starting this chapter, we discuss some 6 note points in the end. CSR, amount to be rounded off, Binami transactions, all that you have to read. That is compulsory. Understood or not? Mostly the questions were tested only from this in past, but generally also these questions only will be tempted to be tested. Remaining or not, that heavily important. Okay. But remember, if you want to become perfect in this chapter, you need to properly read it, analyze it, differentiate between what is the first set and second set points. What points you should check regarding existence of PPE, what points you should check regarding existence of inventory. They both are similar. What points you should check regarding valuation of inventory? What points you should check regarding valuation of PPE? Again, answer will be different. What points you should check regarding completeness of inventory? What points you should check regarding rights and obligations related to inventory? Again, the points are different. In order to have clarity on this, it will take 12 to 15 hours for you to understand, have a good command of this. Getting the point? If at all you are giving lesser time than that, it means you are risking. 12 to 15 hours dedicate for this chapter. You will get equal number of marks. 12 hours, 12 to 15 hours means you will get 12 out of 12 easily for this. 12 marks is minimum. So read thoroughly and compare. What is the difference between what points I verified in existence, what points I verified here? Again, no, here one mistake everyone do. Making simple notes, no. Not required. Okay. Directly read from that, summarize it many times. Many will write notes, write short notes. They spend lot of time on writing the notes. Instead of that, you can spend 3-4 times reading. That will give you much more clarity. Understood? Even for me today, whenever I read items of financials, I will get more clarity every time. Suddenly I remember, I will connect with another point. Every time when you read once, you get more connection. That too when you read only from the original material, not from the cut short notes or your running notes and all. Understood? So these are the important things that you need to compulsorily see in the items of financial statements. Next. Loans is more or less trade receivables. Loans, trade receivables mostly same. Borrowings, trade receivables, loans. They three go on similar lines. Borrowings means we need to pay. Loans means we need to receive. They both are same. Now they will ask you, what are the disclosures that shall be made in Schedule 3 if any loans which are granted to promoters, director, KMP, related parties? How much of the loan is given for repayable on demand or without specifying term? How much is given to promoter, director, KMP and related party? Amount given, percentage to the total loans. Auditor should also check these points in Caro. Correct? Now after reading these items, once again read Caro points. You see how many points you will connect with. In Caro it is talking about auditor has to report this information in the audit report. Here company has to disclose this information in the financial statements. Then provisions and contingencies. What is a contingent liability? Definition is given. First, what are obtained list of all the items where provision is made. Inspect the underlying agreement like warranty, terms, all that in respect of which provision is made. And get the workings for each provision. Obtain expert report. And underlying working for provision amount like warranty involving complex calculation. So auditor may request management to share actuarial valuation report. If at all any legal disputes were there, what is the take of the management? Is it shown as contingent or is it shown as provision? Audit evidence, especially whenever management expert is used, evaluate the competence, capability, objectivity of expert, whether expert is employed by the entity or outside party, whether expert is independent party, what is auditor's previous experience of the work of the expert, obtain the understanding of the work of the expert, whether he has sufficient expertise to evaluate the work, what assumptions he is using, okay, what data he is using. So here they are completely focusing on expert related. If you are deciding to use management expert workings, what points you should check? That is what here. Disclosures. Long-term provision, short-term provision should be shown separately. And contingencies, contingent liabilities and commitments to the extent not provided for means what? Where there is no provision is created. So where you are showing at contingent liability but not provision, you should show separately again here below. AS 29 you need to satisfy. Then how to do audit of sale of goods and services. First, auditor has to obtain, before you do audit of sales, first obtain a clear understanding about the organization and from where the organization will get revenue, like type of service, products, demand for the service, major selling product, new product, a service line, are they continuing or discontinuing any product, or are they launching a new product? Major customers, what are the sales terms and conditions? Who are the people dealing with the sales? Understand that. First, understand management control in respect of sales, like whether segregation of duties are there regarding stock and sales team, who authorizes sales order, who raises the bill, when and how goods are delivered, who collects and records the amount received from customers, who ensure risk and rewards are transferred to customer, how the sales were recognized in the system. They may ask you only this question. An auditor need to obtain an understanding of internal control in respect of sales process. Give few examples. They'll ask you, give few examples. You need to write these points. Getting it? 3 to 4 marks question they may ask. Now, an auditor shall test the controls which entity has set up for sales cycle to determine how strong and reliable they are. If they are strong and operating effectively, the auditor can reduce the substantive testing. What are the examples of controls? Pre-numbered sales invoices, authority for approval of orders, execution of sales order, customer purchase order authorization over certain limit, authorization over receivables write-off. These are all controls, additional controls. Then auditor, once you understand the controls, then you need to apply test of details, no? So select a random sample of transaction, examine the related purchase order, invoice, customer statement to ensure that control being tested is a serially numbered invoice or not. So you will see whether serial number is there, amount is there, all that. The auditor shall ensure that all serial numbers in a section are accounted for and none are missing. How we will see, no? We will take sales register. There are totally 1,500 items were there, invoices. We will say physical invoice number. What is the year first invoice number? What is the last invoice number? If the number is 1500, there 1500, everything is fine. Suppose the numbers are 1550. Whereas in the books sales register only 1500 items were there in the register. 50 invoices, what happened? Cancelled invoices. Again, cancelled sale is different from sales return. Sale return is different. Cancelled sale is different. Cancelled sale means what? Before risk and reward is transferred, before goods are delivered, customer cancelled the order. That is cancelled sale. Return means what? We deliver the goods and customer return. Now, substantive analytical procedure will consist of sales trend analysis, comparison with previous year, category-wise sales analysis, all that. They will ask you once again here. Write about analytical procedure in respect of sales. You need to write this answer. Now, the below table summarizes what audit procedures we generally apply. Whether recorded sales represent goods shipped or not means we are testing occurrence assertion. Now, company showing revenue from operation some amount. Is that amount really sold or not? Is it occurred or not? What points will check? Our objective is what? Ensure that sales is not overstated. What points will check? Sales is not overstated means what? If something is 10 crore, really 10 crore sale is there. Actual sale is 8 crore, company showing 10 crore. That should not be there. How to check that the sales are not overstated? Whether a single invoice is recorded twice or cancelled sale invoice could also be recorded. How do we check this? We compare register with a number. Because sales number cannot be manipulated because it is pre-printed invoice number. It is computer generated number. Year beginning, the number started at 1100. Right now the number is at 2650. Means 1550 numbers were received. So how many we have totally? 1550. Now I will see in the ledger how many were accounted sales. Total credits in the sales account. The total number of credits on various dates is 1600 or 1500 were there. What happened to 50? I will have to question. Test check few invoices with entries in the sales journal. Obtain confirmation from customer regarding genuineness of the transaction. Any fictitious customer, whether sale have been recorded or not, check it out. How do we identify fictitious customer? We can't identify basically. We will take who are all our customers. See again, for manufacturer, customers are wholesalers. For a retailer, customers are consumers. Correct? A retailer, it is very difficult to identify consumers. But for a manufacturer, who are all customers, we can identify. External confirmation will be enough. Depending upon whom. Are you auditing a manufacturer or are you auditing a retailer? Depends upon that. You need to apply that procedure. For a manufacturer, I will apply external confirmation to know about existence of a customer. But for a retailer, external confirmation is not possible. Understood? Only thing we can check is whether it is received or not. Whether any shipment was done without consent or agreement from the customer, without purchase order, you can't ship the goods. If you ship the goods without purchase order, it's a loss for the organization. Next. Look at the invoice sequence. Review journal entries, especially unusual items. Calculate ratios. Check sales written with sales invoice, stock register, credit note, everything. And how do you verify? All the sales made during the year were completely accounted. This is to identify understatement. This is to identify understatement. Whether all sales, whatever sales accounted, are they really occurred? This is to identify overstatement. Whether all sales occurred during the year, are they recorded? This is to identify understatement. Understand? Completeness assertion is focusing mainly on understatement of sales. Occurrence assertion is mainly focusing on overstatement of sales. Suppose 10,000 crore turnover is there. Is it really occurred? What does it mean? Is it really occurred? That may not be there. In reality, less than that might be there. This might be overstated. I want to check whether it is really occurred. All the transactions accounted. Here, what does it mean? There might be some unrecorded. Unrecorded means what? What you shown is less than what it is. Means understatement. Understood? They may ask you like this. Is it understatement objective or overstatement objective? My auditor is following this procedure. This procedure will detect what? Overstatement or understatement. MCQs, they will ask you, case-based MCQs. Getting it? Now we will see at what value the sale is booked. Generally, sale will be booked at gross invoice value minus GST. And any freight collected may be booked separately. Getting it? So, gross invoice value minus GST minus freight outward, which is collected from customer. So, we will exclude it and then record only revenue from operations. See whether AS9 recognition criteria is satisfied or not. We will check AS9. And especially if it is export sales, AS11 also we will see. Now, we need to check the rate at which sale is affected. Is the rate authorized or not? Discounts also we should check. Now, what should be the disclosure? Revenue from operations, you should disclose sale of products how much, services how much, other operating revenue how much. Trade discounts and all has to be disclosed. Whether transactions with related parties are disclosed in the notes to accounts or not, you need to see. Now, other income, this is important point. How do you audit interest income? It is recognized on time proportion basis. Auditor has to see whether based on the fixed deposit receipt, interest is accounted correctly or not. Dividends, you will receive only when the other company declared, only then it should be recognized. See, entity right to receive is established. See, economic benefits, for sure dividend will be received or not. See, dividend can be measured reliably. Obviously, what they will put some rate of dividend, we can measure it. Same way, how do you verify gain or loss or, profit or loss on sale of investment? So, it is recorded as other income. So, what other income consists of? Interest income, dividend income, sale or profit on sale of investments. Now, how to do audit of other incomes? For interest income, first get list of fixed deposits. In that, you will find rate of interest. You apply arithmetical. You calculate once the interest calculation. How do you calculate? Multiplying deposit amount with the rate of interest into number of days. Simple, no? For deposits outstanding as a balance sheet date, get direct confirmation. Obtain interest certificate from banker also. Interest confirmation banker will give. Not only balance confirmation, interest confirmation they will give. Also see form TDS. 26A there is a form. Nothing but form 16A will be there. Getting it? Whenever I was given interest, bank deducted TDS, no? They will give me acknowledgement that they paid this much interest and this much TDS is deducted. See, it is matching with the amount recognized in the books. Dividends also. You see whether the same are recognized, especially whenever there is a sale of investment, X dividend, cum dividend, like that. See who is receiving the dividend, check it out. And disclosures, interest income, dividend income, gain or profit on sale of investments, other non-operating income. Non-operating income means what? Other than business related income. Next, undisclosed income. This point in Caro newly added. Company shall also disclose. If suppose any income tax raid conducted in the company and some amount was discovered during the raid, that is an income but not accounted in the books of accounts of the company. If this income belongs to past period, company shall account it in the current period as a prior period item. Auditor has to check whether this has been done or not and report it in Caro. Management should disclose in financial statements. Schedule 3 was amended like anything in 2020-21 time. Correspondingly, Caro amendments were also given. Are you clear? These were all amendments were made in Schedule 3, 2020. Then how to do audit of purchases? This is again similar to sales. Able to understand, like all of you? How to verify purchases are occurred? How to verify purchases are occurred? Whatever purchases, recorded purchases, are they actually received? Ensure that purchases are not understated or overstated by performing following. Is there any fictitious vendor? Is there any fictitious invoice? Whether goods were received at the factory gate, whether there exists an entry at the security gate. Inward register, we call it as what? Goods inward register. Security keeper, gatekeeper will maintain, storekeeper will maintain stock record. Whether quality inspection is done, GRN is prepared, purchase invoice and purchase invoice, GRN, purchase order, three-way matching we call it as. What we call it as? Three-way matching. Purchase invoice, GRN, only these two if you are doing two-way matching. Whether stock record has been updated by store personnel. Purchase invoice should be original copy, only that you should check. Purchase invoice should have been booked, only risk reward is transferred to me. Purchase invoice should be in the name of our organization. However, in case of different branches, maybe branch address might be given. Input tax component should be booked in input tax, GST input. In case of purchases made from related party, see whether board of directors approval, audit committee approval is there or not. Auditor should review whether purchases should be capitalized. Is there any capital purchases? It should be capitalized, not recorded in purchases account. How do you verify whether all purchases were accounted during the year? Do cut off. Take purchases that are recorded in the last 1 week of the March. See whether goods risk and reward is received in this year or not. Also take purchases that were made in the April first week when the goods were actually received. If the goods were received on or before 31st March but recorded as a purchase of April month, you should question the management. You should modify. See, it's not invoice date. It's not when the amount paid. In our accounting, when the risk is received, when the risk is given. That is the deciding criteria for recording sale or purchase. In GST, time of supply may be based on date of invoice, date of payment, date of delivery, whatever. Getting it? But under accounting, it is ultimately substance over form. Getting it? This question was asked earlier. What analytical procedures regarding purchases auditor will do regarding purchase quantity and price? We do stock consumption analysis, composition analysis. Composition means what? What the stock will compose of: material A, material B, material C, raw material, work in progress, finished good. Composition analysis. Ratios we will apply. This question is important, many times asked. Next, how to do audit of employee benefit expenses. Now there is a question on this. This itself has been asked as a question. Like November 2019 or November 2020 or January 2021, somewhere it was asked. May 2020 exam was not conducted. Auditor need to obtain a clear understanding about organization and its hiring process. Appraisal means promotion, increment and retirement process. What you will check? Only this question was asked. So here entire these 3 points you have to write. So employee recorded employee benefit were actually incurred. Like we are showing employee benefit expenses 100 crore, salary is paid. First understand how entities process for capturing employee attendance, biometric, facial recognition, what? Manual attendance. There is always a risk that an entity could record expense for fictitious employee. We also call them as ghost employees, dummy employees. To address this risk, auditor will choose to meet employees in person, take a sample of employees as per the register, go and meet them, check Aadhaar card, check their employment contract, are they physically existing, check it out. First get a list of employees as at 31st March along with monthly movement for new hires, leavers and continuing employees. Take sample of new hires, look at appointment letter, first month salary credited only from the date of joining till that month end. Same way, take who have resigned from employees. For them, we will do final settlement, full and final settlement, gratuity settlement, PF settlement and all will happen for them. Check it out. Obtain monthly salary register for all 12 months. This is also called as payroll register. Check whether provident fund, ESI, bonus, everything has been collected and accounted properly. Verify provision is made for gratuity and all. In case of PF, compile what is the rate of PF to the basic wage? Basic, yes or no, basic salary only, PF we will charge 12%. Like that. So all that. And perform analytical procedures. How company shall disclose how much is the employee benefit in the form of salary and wages, how much is contribution to welfare fund, how much is contribution for welfare expenses, means tea, coffee, all this, hospitalization expenses, employee, all that. Then how to do audit of depreciation and amortization. Fixed assets, if you understand, this is easy to understand. PPE, if you understand thoroughly, this is easy to understand. You didn't imagine, this much is there in items of financials. Huh? Which books you are following? Them, super. Okay. Then you are following ICA book. How come you can't imagine this much? Auditing in law, no, each and every word you study, right? Same way auditing should be studied. Now you understood, no? It is not something different. It is same like law. Every word, every sentence has a meaning, has an impact. Correct? Huh? See, that's what, no. If you read this and then give you translate the meaning, you don't understand anything. If that is not happened, what is the consequence you should understand? That's understanding. Now tell me, how do you verify depreciation? First of all, take list of fixed assets. Sir, no? Look at when the asset was installed if it is a new asset. Look at the opening balance. And look at the rate of depreciation. Is it matching with Companies Act depreciation schedule 2 or some rate? Matching or not, you should check. Income tax depreciation is not there in this books. It is separate again. That is separate. It is not relevant for books of accounts. See, depreciation, arithmetical accuracy, calculation correctly made or not. See, while calculating depreciation, salvage value has been reduced for calculating depreciation. Yes or no? If it is WDV method, only on the closing WDV of the last year, depreciation shall be calculated. See, if any asset is revalued, only after revaluation, depreciation has been calculated. Correct or not? All of you. And if there is any change in accounting estimate, useful life, see that has been taken into consideration or not. If any method of depreciation has been changed, whether it has been disclosed properly or not. Correct? All that points came almost. Look at fixed asset register and see the fixed asset register is recording all the depreciation aspects or not. All that is there. You will see all these points in real life audit for sure. Only when you go there and you see all this. See, tomorrow when you go for audit, how you should audit, no? Don't ask, Anna, eppadi pannanum, avanukku theriyadu. Because I am experienced, no? Yes or no? He also doesn't know. I think he knows very well, but now I know that he doesn't know. Okay. So first you have seen this audit, no? What is audit? Stat audit means what's your objective? You have to give opinion. You have to give opinion on the financials, whether they're right or wrong. Take balance sheet. Right side, the top, assets were there. Below, liabilities were there. Or liabilities first and assets next. Whatever the approach they can follow. Assets, fixed assets were there. What points you will check? Logically, you do audit. So what are the fixed assets? Plant and machinery. You want. When and all these plant and machineries were purchased. Invoices you want. What is the amount? How much is capitalized here? And how much is the depreciation? What method they used? Why they used that method? Is the plant and machinery, suppose they followed SLM. Is it really SLM? Is SLM suitable? Check it out. And in this way, you should do audit. Then you should take the actual bills and vouch whether the amounts are correctly made or not. Yes or no? Then remember, in Caro, what you should report about fixed assets. Check it out your reporting requirements. Always, whenever you are verifying some item, always cross-check with your reporting requirement. The way you do audit should change. Getting it? Going there, waiting for lunch time, getting it, and verifying bills, ticking something. Enna pannite, audit pannite. Adula enna pannite, audit da pannite. This is what they do, yes or no? Actually, that culture should evolve. In the offices, the culture should evolve. Like principal should make you sit and explain what exactly happens. Why we are doing this, what exactly the scope of work, all that you should. How audit meetings will happen, once you get an audit. In some audit firms, especially big firms and above medium firms, it happens formally, to some extent good. In small and medium firms, you will be called. In the point audit பண்ணிட்டு வாப்பான்னு சொல்றேன். This is what they do. என்ன பண்ணணும்? போப்பா நீவே கத்திக்கிற அப்படி சொல்றேன். What? I don't understand anything. Correct? We don't understand anything. This is what happened to me. போப்பா ஆடிட் பண்ணுப்பா. அப்போ எனக்கு ஆடிட்னா என்ன தெரியும்? ஸ்பெல்லிங் தவிர என்ன தெரியும் எங்களுக்கு? For you at least, we are there to give you what exactly happens in audit. But for us, the person who came to teach us audit doesn't know audit first of all. What he knows is only reading everything and explaining. And giving, dictating notes and take notes. அவ்வளவுதான். இது மட்டும் தான் தெரியும் எங்களுக்கு. வேற எதுவுமே புரியாது, எதுவுமே தெரியாது. சொன்னலே, that time the papers were easy, so we qualified easily. Okay, though it took little effort. Now papers are tough. And you're getting better resources also. Same way. Both are offset. Both are compensated. Then how to do audit of other expenses like power, fuel, repairs, all that. Now they asked this sentence exactly as a question. While the auditor may choose to analyze monthly trends for expenses like rent, power, fuel, the auditor generally prefer to vouch other expenses. What points he will consider? Whether expenditure belongs to current period, whether it is revenue and not capital, supporting documents we will check, whether expenditure is classified under correct expense head, whether expenditure was authorized, whether it is related to business but not personal. What is this question? Generally, this is again linked with the substantive procedure, analytical procedure. Generally, when controls are strong, you can just perform analytical procedure and then leave. But these expenses, generally you can apply analytical procedure. Okay, if it is in line with the trend, you will leave it. What else you can do for these expenses they are asking? What I will do? I will take supporting documents, bills I will see. I will vouch them. Yes or no? I will see is it revenue expenditure or capital expenditure. I will see it is business expenditure or other expenditure. They debited it under repairs. Is it really repair expenditure or some other expenditure? Correct head classification or not. These are all the points I will check apart from analytical points. Understood? So how to do audit of rent expenditure? Verify whether all the 12 months rent is recorded. Only rent amount should be debited to P&L. Deposit given, advance given shall not be debited to P&L. See the rental agreement is in the name of the company. Power and fuel expenses. Take month-wise schedule. If any unusual consumption is there in 1 month, why? What happened? Check it out. Whether corresponding increase in production happened or not. Suppose in 1 month power and fuel is so much. Management told, no sir, that time production was very high. You see production record, really production was high. Why production was high? We received a big order. Which means next month sale should be there, no. You see how the chain will go. So verify expenses recorded for all the 12 months. Only units consumed. Analyze monthly power units consumed by linking to finished goods and investigate. You take bills, power bills, and see how many units consumed, what is the rate, apply. Nowadays you need not, because it's automatic, no. Power bills and all automated, no. They automatically come. You cannot manipulate the rates and all. And how to verify legal and professional expenses? Only this they can ask for 3 marks. How to verify traveling, repair, maintenance, printing expenditure? That alone can be asked for 3 marks. That's it. I gave you a glimpse idea. Getting it? Now what is your duty? You have to go through each and every line thoroughly. Understand exactly why you have to do it. It's not what, it's why. That is the question you should make yourself. Getting it? That's it.